The very first thing that you want to do is you want to begin to identify where this banking institution pulls from. I don't care if it's a business loan, a business line of credit, an auto loan, a credit card. It does not matter. You need to understand where that bank pulls from. That is rule number one. I'm going to be talking about your path. Understanding your pathway. When you have the knowledge and the understanding, it puts you in optimal position to get approved for the funding that you need. And so behind me, I have this outstanding dynamic acronym, and as you can see, we have a bit of a yellow brick road right here to guide you along the way. But on my journey, I realized that I garnered the most success for me and my clients when I understood the path, when I understood the trajectory, when the road and the pathways were clear. And so we're going to talk about how you can make your road and your pathway as clear as possible. Again, we're talking about the path. Let's go. So here we go. The P in path stands for where the bank pulls from. It is so vitally imperative that you understand where the institution pulls from. I don't apply anywhere until I understand where they pull from. I need to understand where they're sourcing the information from on me and my profile. So many entrepreneurs and people make the huge mistake by going to banks and just applying blindly, right? You don't know where they pull from. You don't know their underwriting requirements. You don't know what business industries they hate. You don't know anything about their internal process. You just went because you saw someone online, or because your brother, your sister, your cousin, your auntie, your girlfriend, your boyfriend told you that they went to a bank and got approved for $25,000. Congratulations! But no one situation is cookie cutter. And so the very first thing that you want to do is you want to begin to identify where this banking institution pulls from. I don't care if it's a business loan, a business line of credit, an auto loan, a credit card. It does not matter. You need to understand where that bank pulls from. That is rule number one. You need to know where they pull from. And so what I have here is I have two directions that we could go in. The first place a bank could pull from would be your actual business credit profile. The second place your bank could pull from would be your personal credit profile. But let's dive even deeper into the business side. They can either take a look at your Experian Business, they can take a look at your Equifax Business, they can take a look at your Dun & Bradstreet business credit report, or they can take a look at your Creditsafe. However, I want to break down and go a little deeper into these particular components right here, because if you are a startup, you're a brand new business, oftentimes you don't even have a track record of having any type of business credit or any type of loans or any track record or history. However, I want you guys to be as sharp as possible. As, what's my guy's name? John Hope Bryant says you want to be dangerous from the neck up, okay? So you want to be able to look in different vantage points, because you never know how a bank may hit you. Now, this is specifically for somebody who's been in business for at least a year, 2 years, 3 years, 4 years, 5 years. Yeah, at that point, the bank wants to go in and see, who have you done business with before? Have you ever had any open trade lines, any business lines of credit, any business credit cards? Have you ever had any business auto loans? The bank wants to go in and take a look at that for their records to gauge your approval. Now, the next space that we go to, and I'll write this right here on the board for you guys, and this is your personal side. Now, as you can see, your personal side also has an Experian, you also have an Equifax, and then you have a TransUnion. Now, if you look in between both of these, it's super key, because you'll see that you have similarities here. You have an Experian Business as well as you have a personal Experian. And you also have an Equifax Personal just as much as you have an Equifax Business. However, as you guys might imagine, they are two separately different entities, all right? They do not display the same type of information. The information displayed is totally different. One is bound by your personal credit report. The other one is bound by your business credit report. Now, what I wanted to write down for you guys that is super key is understanding this component here, that 99% of banking institutions all over the country are going to check your personal credit report, especially if you're just starting out. There's so many people that want to go into this whole funding journey and say, I don't want to put my personal, I don't don't want to put my social security number up. I don't want to put my personal credit up. My question is why, right? We believe in reciprocity. We believe in doing ethical business. I always give people my very bare minimum explanation or definition of credit, right? If you don't know nothing about TransUnion, Equifax, Experian, that's okay. I know people right now to this day that have 750 and 800 plus credit scores because they abided by what I define good credit to be. And that is paying who you said you were going to pay. If you honor your commitments, you won't have any problem with your credit, thus putting you in a situation where you don't mind putting up your personal credit to get the funding that you need to grow and expand your business. Who cares if I got to put my personal up to get $25,000? I'm going to pay you back anyway. Who cares if I got to put my personal up to go get $150,000? I'm going to pay you back your money anyway. I'm trying to get this money so that I can reinvest back into my business, so that I can go out and buy other businesses, so that I can hire staff members and I can use leverage, right? Money is nothing but a lever that causes you to expedite and operate in time in a more efficient manner. Here we go. I want you guys to keep this in mind. 99 of the institutions are going to look at your personal credit. Again, we're talking about path now. We're talking about how can I best navigate on my path and my journey. I got to have the knowledge. I got to have the understanding. If I don't know what I'm doing and I don't know what I'm looking like, I cannot be highly successful on the journey that I'm on. Now, here's another thing that I want you guys to keep in mind when you start talking about where a bank pulls from. The other key component is understanding if this bank gives you a hard inquiry or a soft inquiry. Oh my God, I don't know if I got enough time in this video to talk about this. Does the bank give me a soft inquiry or do they give me a hard inquiry? Now, I wrote up here 3 times 3 inquiries, right? This is the sweet spot amount of inquiries that you want to operate in. 3 inquiries or less when you start talking about going and applying to banks. You want to have 3 inquiries or less, specifically when you start talking about being able to pull from your personal credit report for business funding. However, when you come here and you start talking about this component of a hard inquiry versus a soft inquiry, I wrote frequency down at the bottom because when I find a institution that only gives me a soft inquiry, whether it's for one of our clients, because you do not suffer loss whether you get approved or you don't. Whether I get approved for this amount of funding or I get denied, I don't walk away with a hard inquiry. For those of you guys who don't know, hard inquiries can cost you anywhere between 2 to 4 points on your personal credit report. And so initially, the first step that I want to take when I'm trying to go out and maximize and acquire funding is I'm looking at the spread of all institutions that are going to give me a soft pull, a soft inquiry. Again, if I get approved for 50 grand, great. If I don't get approved for nothing, great. I don't suffer loss. The only thing I do is gain. I either gain knowledge and understanding as to why I failed, or I gain $50,000. So this is what you guys want to keep in mind. The premium is in the soft inquiry. The premium is in the soft pull. Man, I can't tell you guys how many times I've heard people prior to me even getting into the finance and business space over 10 years ago. Prior to that, in my formative years, I would just always hear people say, don't let them run your credit. Don't give nobody your social. Don't let them run your credit. I don't want to go there to get my credit ran. So I had that embedded inside of me like, hey, that's not a good thing. But when you start talking about gaining access to lending institutions and banks and products that will only go in and do a soft pull. Jerome, what is a soft pull? What is the difference? When you start talking about a soft pull is nothing more, nothing less than the institution gaining access and doing a soft scan and evaluation and assessment of your profile, right? So they can gain access. If you go on Experian.com, you can gain access right now to everybody that's doing soft pulls. You got insurance companies doing soft pulls. You got lenders that already gave you money right now doing soft pulls. You got people that are thinking about extending you pre-approval letters right now that are doing soft pulls. So you want to be aware. The first thing you want to ask, okay, where are they pulling from? All right, now how are they pulling? Are they doing a soft pull or a hard pull? I want to maximize that because if I can find me 5, 6, 7, 8, 9, 10 banks that's all doing soft pulls, I may be able to walk walk away with $100,000 without even damaging my credit. Are y'all hearing me? Man, I'm pumped up and fired up, man. Let's get to work. Now, the next thing before we go on to the next place is identity. This is such key and dynamic component when you start talking about funding, when you start talking about credit, when you start talking about maximization. That is my favorite word. I want to maximize everything that I put my hands on. And so when you start talking about identity, you want to identify how many inquiries you have per credit bureau. If you're watching me right now, if you're feeling me right now, I need you to take note of what I just said. I need you to do it either right in the midst of this video or as soon as this video ends. I want you to go and I want you to see how many inquiries you have on TransUnion, how many inquiries you have on Equifax, how many inquiries you have on Experian. Because one of the things that you'll realize is that almost 98% of banks all utilize at least one bureau. You have some banks right now like Chase may give you one hard inquiry on two bureaus like TransUnion and Experian. But for the most part, most banks are only going to engage one bureau. This is how you become more acquainted and acclimated with stacking different funding. But again, I want you guys to begin becoming more acquainted with your credit report, with your credit score. But specifically right now in this moment, I want you to go and I want you to identify, because one of the things that we see all the time is that some clients may have 9 inquiries on TransUnion, but they may only have 1 inquiry on Experian. Well, if I got 9 inquiries on TransUnion, and I just heard this old wild, crazy Jerron online talking about the sweet spot was 3, then I'm not going to touch the bureau that has 9 inquiries. I'm going to go with the one that only got 1. And I'm gonna try to maximize that situation until those other inquiries fall off. And so again, you guys wanna know, if you don't take nothing else away from this, all right? This is the same pathway that I use to garner over 7 figures in approvals. This is the same pathway I'm figuring out. Where do they pull from? Is it a hard inquiry? Is it a soft inquiry? I'm setting up for victory. I'm setting up, man, for my winning season by taking it slow. And I had one of my old former managers in the automotive industry. He said, man, brother Jerron, he said, sometimes you gotta slow down to speed up. Sometimes people moving so fast, there is no way they can get the victory because they're moving too fast. You're moving at the speed of light and you can't even see what's going on and what's happening.